Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, July 10th. In this episode, I'll tell you why Meta is investing billions of dollars into a sunglasses company. Then, Starbucks' plans for their struggling China business. Finally, Trump's new tariffs on pharmaceuticals. Let's start with Meta. Meta is investing $3.5 billion in the world's largest eyewear maker, EssilorLuxottica. This is the company behind Ray-Bans, Oakley's, and about another 150 brands that dominate your local sunglasses hut. Now, this investment from Meta gives them a minority stake of just under 3%. But according to Bloomberg, Mark Zuckerberg is considering building that up to over 5%. To me, this is just another sign that Zuck is going all in on AI. Especially AI-powered wearables like sunglasses. Meta and Luxottica have been working together since 2021 when they launched the first version of the Ray-Ban smart glasses. Then, they launched an updated version in 2023, which included an AI-powered assistant and better built-in cameras. And those have quietly been a hit product, selling over 2 million pairs since just last year. So now these two companies are expected to ramp up their annual production of smart glasses to 10 million units by 2026. They've also announced plans to roll out new versions of these smart glasses under luxury brands like Prada and Oakley. I mean, Zuck's dream has always been to have a hit mass-market hardware product. He tried to do that with VR headsets, but that didn't really catch on. So right now, Meta is reliant on Apple and Google to get its apps to users. Zuck doesn't want to be reliant on those two companies, so that's why he's pushing hard to get a hit hardware product out there. And for Luxottica, I mean, this could be a potential jackpot if smart glasses actually go mainstream. That's why their stock jumped 7% on the Paris Stock Exchange on this news. It's the biggest move from the company's stock in just 3 months. And meanwhile, here in the US, Warby Parker's share jumped 4%, with investors betting that they might get in on the future of smart glasses as well. Let's shift gears and talk about Starbucks. The coffee giant is looking to sell their struggling Chinese business, and it's drawing interest from investors. According to Bloomberg, Starbucks was hoping to sell just a minority stake in their China business, but most of the bid so far has been for the controlling ownership. The proposals reportedly value the China business between $5 and $10 billion, with expectations leaning towards the higher end. Now, China is Starbucks' second largest market. It used to be Starbucks' growth engine, but these days, the company is struggling against homegrown Chinese chains like Luckin Coffee. I mean, Starbucks' Chinese business has barely grown over the past couple of years. The company's revenue in 2024 was around $3 billion, which is the exact same in 2022. In fact, Luckin Coffee took the top spot from Starbucks in 2023 as the largest coffee chain in China, thanks to their cheaper drinks and rapid expansion. And just to give you some context here, Luckin just posted 41% revenue growth last quarter, while Starbucks' China revenue only saw 5% growth, and their comparable store sales were flat. And that's why you can see why Starbucks is thinking about selling their China business entirely. We'll see what the company ends up doing. Maybe they try to stick around and try to turn things around in China. But if they were to sell their China business, they could at least use that money and time to focus on the US market, which, I mean, let's be honest, hasn't been doing great either. Starbucks stock is up around 5% this year, which is slightly outperforming the S&P, but their shares are down close to 20% from all-time highs a few years ago. Trump reiterated his plans to impose tariffs on pharmaceutical goods, threatening to charge as much as 200% as levies on a product category that has largely been immune from his trade war due to the public health impact. Trump said that pharma tariffs will not take effect immediately, potentially referring to drug makers. He said, "We're going to give people about a year and a half to come in, and after that, they're going to be tariffed." He added, if they have to bring the pharmaceuticals into the country, they're going to be 200% more expensive. Amid Trump's repeated tariff threats against pharma imports, major pharma companies such as J&J, Eli Lilly, and Novartis have already announced plans to expand their US manufacturing footprint. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Verona Pharma are ripping higher this morning, jumping more than 20% after Merck announced that it'll acquire the London-based lung therapy company for $10 billion. Now, this would be Merck's biggest acquisition since 2023, and this deal would expand the company's respiratory treatment portfolio, which currently features 2 other chronic lung disease treatments. That's all for today's show. Keep navigating those waters, and see you tomorrow.
Hello.